I do want to bring in our next guest, Jason Rotman, director at Everplus Capital. Jason, good to see you this morning. Break down these markets for us. I mean, we're still near record highs. Is the optimism something that can be sustained?
Yeah, I think classically we have a lot of precedents. I mean, this is over literally 10, 20 years whenever Fed chairmen say these big statements like Greenspan, irrational exuberance, that popped the tech bubble, so on and so forth. You have, and then Greenspan said, we'll be patient. That was years ago. The market started a huge rally. Now we have Yellen, who was the chairperson, now the new secretary of the Treasury. She said something along the lines of, hey, we just have to go big here. So I think she gave the market license to continue to make bullish bets that the government's going to continue to support the economy, even with the vaccine rollout, even with numbers starting to kind of temper in certain parts of the world. When the incoming Secretary of the Treasury says, hey, we're going to go big or go home, the market's going to keep buying, and that's what we're seeing right now.
Janet Yellen, obviously very much a dove, the first female Treasury Secretary that we've ever seen in this country. But I guess, how do you pair that with growing calls that we've seen that this market is overvalued, that there are pockets of the market that look like a bubble? I remember back in December, almost every single guest that came on our show for the final 2 weeks of December said that we were due for a pullback. Does that cause any concern for you, Jason?
Well, the valuations, Kristen, like Einstein said, I think everything is relative. Valuations are relative to projections of earnings. So that's what makes the game fun to play. It's not necessarily black and white. And when you have trillions of projected stimulus coming into the market, that has to factor in one way or another to valuation. So again, I would take the stance at this point, based off of all the factors that I mentioned and more. China is coming out with great economic numbers, et cetera. Biden's more China friendly. We're starting to see this kind of prediction that the U.S. and China are going to cooperate more. There's going to be more economic, mutual production in a sense. So we have some bullish animal spirits coming out. There's no major cause for correction right now imminently.
Okay, so let's talk about some of these day trading stocks. GameStop, a perfect example. Jason, a huge spike yesterday. The stock was halted at several points, then it fell, and now it's up again today at double digits. This speaks to certainly the day trader activity that we see in the market. Is this something that can derail the overall market?
Well, the overall market, not one bit. You know what I mean? GameStop is like, what's GameStop? It's a few billion-dollar company. Apple's like $2 trillion, right? So no, it's not going to derail the market. However, it is just one of those stories that actually makes sense when so many stocks are at 52-week highs. We have multi-trillion-dollar companies. Where are the investment opportunities? Where's the value? GameStop is a very niche story. Massive short interest. We have the guy, Michael Burry from The Big Short, being an Uber bull. We have an online message board that has taken over the stock, that has caused it to go up thousands of percent. So it's just kind of one of those niche stories, here today, gone tomorrow.
Exactly. So the subreddit Wall Street Bets, moving this stock. We saw it perfectly on display yesterday, Jason, with the rise of the day trader. I'm just curious if that has changed your own routine. Are you looking at some of these online chatter platforms as you build your own portfolio?
I only have so much time in the day, Kristen. I wish I could. No, I'm not. It's just an interesting story.
Okay, so let's talk about China. You mentioned strong China growth, and we've seen some of these Chinese ETFs certainly rise in the wake of that. The only country that did book solid GDP for last year, despite the U.S. and other developed countries actually likely to see a contraction for 2020. Is there still further to run? Are you putting money to work in international markets, like emerging markets? For instance, China would fall in that category with the dollar where it is, and China in particular.
Oh yeah, big time, 100%. Emerging markets I've held for a while. When we talk about value, I think there's tremendous value there as the economy, continually becomes more interconnected from a global standpoint. China, I think there's tremendous opportunity in China. Anytime you have massive political fundamental shifts, there's going to be changes in where the opportunities lie. I think, China, there's leveraged bullish ETFs, not that I would recommend that for anybody, but if you're really looking for opportunity fundamentally, China ETFs, leveraged bullish China ETFs have a long way to go higher. I think if I come on 6 months from now, we're going to see a lot higher prices in Chinese stocks overall.
Interesting. So I do want to go back to these meme stocks a little bit that we've been talking about. I know you said you're not necessarily monitoring these platforms on a daily basis. They are niche stories. GameStop is a niche story. But I just wonder from the portfolio manager perspective, with more stimulus expected to eventually reach Americans, does this fundamentally change the stock market? We had seen Melvin Capital actually need a bailout from Citadel and Point 72 because it got caught on the wrong side of this day trading stock.
Well, here's the deal with, the Melvin Capital example, right? Like this GameStop, if we're going to use GameStop as a proxy for this whole, online day trader revolution and whatnot, sound familiar? NASDAQ tech bubble? I think it does. But the whole thing with Melvin Capital briefly is that GameStop, the rally in GameStop, it's not like it came out of nowhere. I mean, fundamentally, they have hundreds of millions of dollars of cash. They have a massive, massive, massive amount of short interest. The ingredients were already there for an ultimate short squeeze. It just got precipitated and accelerated by the internet. So yes, we're going to continue to see the internet find these interesting opportunities that actually make sense. And maybe the development will happen faster because more people are connected on it. So it's not like that crazy, actually.
All right, Jason, we covered a lot of ground. Always good to get your take. That's Jason Rotman. He's a director at Everplus Capital.